Fiverr is one of the biggest online marketplaces for freelance work, and at certain points last year its stock saw explosive growth. At one stage it was 10x its price at the start of 2020. Fiverr works by letting buyers pay in advance for gigs, which can be any type of freelance service. For example, web design, content writing, social media marketing, and many more. Before the global pandemic, there had been a slow shift in people moving towards more freelance type work. But since the pandemic, there has been a huge acceleration in the change of how we actually do our work. Working remotely has become the norm and has made companies more comfortable with outsourcing their work to the freelance economy. Similarly, with millions of people that were made unemployed overnight, a lot of people were actually forced down this route. So in today's video, I want to assess whether now is a good time or not to invest in Fiverr. I will look at everything to how they make their money, their competitors, the industry, the share price, the financials, what the analysts are currently saying, and any other economic or political factors that you should consider. So just before we get into it, just a quick disclaimer, this is not financial advice, it is just to help you with your research around this company. So I'm going to kick it off first by looking at the price, and then we will go and have a look at all the other different factors and take them into consideration, and then come back and look at the price again at the end of the video to see if it makes any sense. Let's jump across to the charts here now and have a look at the prices. So as we can see here, the price that it closed on Friday was $205.31. So it saw a nice little gain there on Friday actually of 4.15%. So this is something we see quite regularly. You might be up 5% one day, you might be down 5% the next day. That is something you have to kind of live with when you're trading with something like Fiverr, a high growth stock. So as you can see from the charts here, the price is down quite a lot since the middle of February. So it hit its heights there, I think the 12th of February there, of $322. I bought some shares myself back in September at about $129. But I plan on holding them for quite the long term. So I was up at least over 100% there, but I'm up about 68% at the moment. So let's just see how much the share price has actually fallen by. So from its heights, it fell as low as down 50%, which is a huge crash. The stock market completely rotated out of high growth stocks and into more kind of value stocks. But since its lows there a few weeks ago, it has started to pump back up again a bit. So we're at $205. So we're down still about 36.5% from its overall highs. So it's down still quite a lot on its overall highs. But I think the overall highs there were a bit crazy altogether. I don't think we will be seeing the prices of 322 for quite some time to come yet. So I've just added in Fiverr's main competitor to the chart here just so we can compare them. So I've added in Upwork onto the chart here. So as we can see here, their prices are very much correlated. As one goes up, the other follows it. As one goes down, they both go down together. So I think Upwork has a valuation of about 6 billion at the moment, and Fiverr has a valuation of 7 billion. So in terms of valuation, they are very close to each other. Now let's have a look at some other factors to see if we can make sense of that share price. So first off, how do they actually make money? They explain it here in this diagram. So for instance, if you want to buy $100 worth of services on Fiverr, you're going to pay $105. So the buyer is paying a fee of $5 to Fiverr. And then the person who is giving the services, the freelancer, in that case, Fiverr will charge them 20% of their earnings. So $20 will go to Fiverr from the freelancer. So all in all, on a $100 transaction, Fiverr are going to earn $25. They have lately been innovating around their revenue models. So they have introduced a subscription model and a milestones model also. So with the subscription model, you don't have to just get a freelancer for a week and then get a different freelancer for another week. You can engage with a freelancer now for maybe 3 to 6 months. This should lead to a lot more higher value services being offered also on the platform. And the milestones, they are designed to increase the trust on the platform also. So you can break down a freelancer's job into lots of different little sections and only pay them once they've completed each part of the job. So next up, how big exactly is the freelance economy? Both Upwork and Fiverr have done some research on this, so I'm going to share with you the stats from both different companies. So from Upwork's research on the US economy, 59 million Americans are currently freelancing, which is 36% of the total workforce. And these freelancers contributed $1.2 trillion to the economy last year, which Upwork say is an increase of 22%. So that is a huge increase in the space of 1 year. From Fiverr's own studies, they believe that the total income from the gig economy in the US is 815 billion, of which about 115 billion is something that they see as easily tappable. That is an absolutely huge untapped market when you consider only about 1 billion or so services are actually transacted on Fiverr. So there definitely is huge opportunity there, as Fiverr still only has a small fraction of the market. Next up, let's take a look at the company's latest financial results. So they released their Q1 of 2021 results earlier in May, and here are some of the highlights. Revenue for the quarter was 68.3 million, which blew their targets out of the water. This was actually a 100% increase on the same quarter in 2020. Active buyers on Fiverr are now 3.8 million, which is an increase of 56% year on year. Also, the average spend of each buyer on Fiverr is $216, which is an increase of 22% when you compare it from the same time last year. Because of this growth, they have revised their annual targets for the year of 2021. So their lower estimate was about 277 million in revenue for the year, but now they're estimating a lower estimate of 302 million for the year. One thing you have to contend with in the short term though is that the company is actually loss making. They made a loss for quarter one of 17.8 million. This is pretty much a symptom of where they are within the life cycle of the company. You can see that they are pushing very hard to grow their user base on the platform. They spent 42 million on marketing alone in the first quarter of 2021 and another 17 million on R&D. So as the company matures a bit, I will imagine that these amounts will start to scale back a bit. But this profitability question, I believe, is the reason why we see so much volatility in the price of Fiverr. I think analysts are really struggling to put a valuation on the company. Because of their low earnings estimates for the near future, they have a forward PE ratio of 183. So if you are a value investor, this would set off alarm bells for most people. From a balance sheet perspective, they are very strong. They had a cash balance of about 183 million at the end of March. This was out of a total amount of current assets of 561 million. When you compare this to their current liabilities, they only have 179 million of current liabilities. So their current assets outweigh their current liabilities of a factor of 3 to 1. So next up, let's have a look at some of the economic and political factors that you should also take into consideration. The current levels of inflation in the US are worrying a lot of investors. It was running at a rate of 4% in April. But I think we just have to remember this is just one bit of data, and we should not really worry about this too much until we see a longer trend of inflation. Unless we see further inflation in May, June and July, I don't think we have to worry too much about this. Secondly, Fiverr is an Israeli company and there has been a lot of tension in that area in the last few months. The company's share price hasn't been too affected by what's been going on. However, that could all change very fast. All it takes is a good hashtag or an influencer saying to boycott Fiverr services and we could see a massive sell-off. Again, if somebody is an ESG investor, this could potentially write off Fiverr as an investment for them. Let's now take a look and see what the analysts are saying. So at the moment, out of 11 analysts, 8 of them have rated Fiverr as a buy, 1 has rated them as a sell, and 2 have rated them as a hold. And they have set a price target for the near future of $226.83. So let's jump back to the charts and see where this price target would leave us. So I'm just going to have a look at the charts here again and see what kind of percentage returns we would get if we invested at today's levels and it did go to the analyst prediction of about $226. So let's have a look here. So from today's level up towards $226, that would be a return of about 10% or so. So you're looking at about a 10% return if the analysts are right on their predictions. One bullish indicator to keep an eye on is the stock price just passed over its 200-day moving average. So since about the middle of March, it has actually been below this level. But now, since yesterday, it crossed over that 200-day moving average. So that could signify that we could be in for a bit of growth in the short term. So that's pretty much it from my analysis today. I would love to know what your own thoughts on Fiverr are. Have any of you invested in it already, or are you planning on investing in it in the near future? Let me know if there's any good or bad points about the company that I may have missed out on there in that video. So thanks for watching the video, I really appreciate it. If you did enjoy it, make sure to sub to my channel and like the video so we can keep track of content like this in the future.